If markets are making you uncomfortable right now, you are not alone. But interestingly, these are often the phases where long-term opportunities are created. Hello friends, a very good day to all of you, and I hope you are all doing well. Over the next few minutes, we will discuss some of the key developments in the Indian equity market over the recent past and share our outlook going ahead. The Indian equity market continues to experience heightened volatility over the past month, largely driven by evolving global uncertainties. Developments in West Asia, particularly the tensions impacting energy markets, have been a key driver of this sentiment. While markets have been volatile, large cap stocks have shown relatively better resilience compared to the broader markets, with mid caps and small caps witnessing higher dispersion and bouts of sharp corrections. Foreign investor sentiment remained cautious during the period, with outflows worth Rs 25,000 crore during the month. This was largely influenced by global risk appetite and geopolitical developments. Rupee woes have also added to the outflows. Domestic institutional investors continued to provide stability to the markets, supported by steady SIP flows. Mutual fund buying was close to Rs 43,000 crore during the month. On the macro front, the domestic environment remains relatively resilient. Policy support, both fiscal and monetary, continues to be conducive for growth. However, the key variable to monitor in the near term is the trajectory of energy prices and its impact on inflation and corporate margins. The crude oil prices have remained volatile and yo-yoed between $90 to $110 per barrel. From an earnings standpoint, the quarter gone by saw pretty handsome growth across, with mid-cap and small-cap earning growth accelerating the most. As per a domestic institutional research house, the mid-caps under their coverage showed a profit growth of almost 36% and the small-caps delivering a 19% profit growth. However, the outlook remains somewhat mixed. While certain sectors continue to demonstrate healthy earnings visibility, there are pockets where margin pressures persist, particularly due to input cost volatility. Overall, earnings direction will remain an important driver from the markets for here. On valuations, large caps are broadly trading closer to the long-term averages, while select pockets of mid-cap and small caps still remain elevated relative to the historical ranges. In such an environment, the focus on earnings delivery and quality of businesses becomes even more critical. From a portfolio positioning standpoint, we continue to focus on businesses with strong earning visibility and balance sheet strength. We believe opportunities exist in select domestic cycles, including capital goods and manufacturing, which are benefiting from the ongoing investment cycle. At the same time, we remain selective in consumption and export-oriented sectors, given the evolving global environment. From an investor's perspective, we reiterate the importance of following a disciplined approach towards equity investing. Given the likelihood of continued volatility in the near term, investors should focus on regular investing and maintain a long-term perspective. Periods of market correction should be utilized as opportunities to build portfolios in a staggered manner. Over the medium term, we continue to remain constructive on the corporate earnings cycle in India. However, we recommend a relatively higher allocation towards large cap, while exposure to mid and small caps should be calibrated with a longer investment horizon of 3 to 5 years. The key risks to monitor remain both global and domestic. Globally, developments around geopolitical tensions, especially in West Asia, and their impacts on energy markets will be important. Additionally, policy actions and growth outlook in developed markets will also influence market direction. Domestically, the key variable remains the delivery of corporate earnings and how companies navigate input cost pressures. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.